So not too long ago, the US government did something pretty wild, something you almost never see. It bought a massive piece of Intel, one of the most iconic tech companies in America. Now, this wasn't a loan, it wasn't a typical bailout. They straight up bought stock. So the big question is, why? Let's dig in.
Everything really starts with this number, $8.9 billion. Just let that sink in for a second. That's the amount of cash at the very center of this whole story. And let's be super clear here. This isn't money from some Wall Street hedge fund or a foreign investment group. No, this is coming directly from the United States government itself. Which, immediately brings us to the big blinking question mark in the middle of this whole thing. Why on earth is the US government buying a huge chunk of a publicly traded private company?
So here are the specifics. The government now owns almost 10% of Intel. Think about what that means. This isn't a grant they can just pay back later. It's an equity stake. It means Uncle Sam is now one of the biggest shareholders, one of the most powerful voices in the room at a company that is an absolute cornerstone of American tech.
Okay, so to really get why the government would make a move like this, we first have to understand just how much trouble Intel was actually in. This deal wasn't a reward for a job well done. It was basically a rescue mission.
I mean, for decades, right? That little Intel Inside sticker meant you had the best of the best. They were the undisputed kings. But lately, not so much. The king has been taking some serious blows, falling behind competitors and getting hammered by the market.
And you can see just how brutal the market's judgment has been right here. While its rivals, especially those focused on AI, have seen their stocks soar, investor confidence in Intel just collapsed. It wiped out more than half the company's value in just 1 year.
That pessimism, it was fueled by numbers like this, a $1.6 billion loss. And that wasn't over a year. That was in a single quarter. That is an insane amount of money to just burn through.
And of course, these huge, abstract financial numbers, they have a very real, very human cost. The company announced it was planning to lay off around 15,000 employees. That is a staggering 15% of its entire global workforce.
And honestly, the light at the end of the tunnel looked pretty far away. Intel's big bet for its future is this foundry business, which is a fancy way of saying they want to be a factory for hire, making chips for other companies. A great idea, but even that plan wasn't expected to actually turn a profit until 2027 at the earliest. They were just bleeding cash.
So it's a pretty bleak picture, right? The company's in a nosedive, it's losing money hand over fist. Who on earth would step in with billions of dollars to try and save it?
Well, the rescue didn't just come from one place. It actually came as two separate lifelines, both thrown to the company in the span of one single, crazy, transformative week.
And the speed of this whole thing was just breathtaking. Look at this. On August 18th, the first investor makes their move. Just 4 days later, the second, much bigger deal gets announced. Intel's entire future was basically rewritten in less than a week.
So first up, you have SoftBank, the huge Japanese investment firm. They dropped $2 billion for a small 2% stake. But here's the thing, this wasn't just a simple market play. Sources say there was some serious pressure from the Trump administration pushing its allies to invest in critical American technology.
And then you get the main event, the US government's deal. And the way they structured it is fascinating. They basically took money that was already promised to Intel from the CHIPS Act, and instead of a grant, they converted it into direct ownership. Now, it's a passive stake, so no government officials on the board of directors. But, and this is a big but, it came with a catch. A special want that lets the government buy another 5% of the company if Intel ever loses control of that all-important foundry business. It's a safety net for sure, but it's a safety net with teeth.
So why? Why would the US government make such a weird, unprecedented move? Well, this wasn't just about saving one company's balance sheet. The real motive here is much bigger. We're talking about a global power struggle. At the end of the day, it's about one thing: national security. Plain and simple. Because semiconductors, computer chips, they're the absolute backbone of the modern world, from our phones to our power grid to our fighter jets.
You see, chips are ground zero for the tech Cold War between the US and China. The American military depends entirely on them. But here's the scary part. Most of the world's most advanced chips are made overseas, mostly in Taiwan, which is a major geopolitical hotspot. The whole point of the CHIPS Act in the first place was to fix this, to reshore that manufacturing, bring it back to America, and make sure the US can never be cut off from the tech it needs to survive.
So when you lay it all out like this, you can see how this was kind of a win-win-win for everyone at the table. Intel gets the survival cash it desperately needs, plus the massive seal of approval from the government. The government gets to secure a vital piece of its domestic tech supply chain, and SoftBank, they make a smart investment that also happens to earn them a ton of goodwill in Washington.
But, and this is a huge but, this entire situation kicks up a fundamental conflict, a debate that really goes to the very core of how the American economy is supposed to work.
What you have here is a head-on collision between two core American ideas. On one hand, you have the people who say this is a necessary safeguard. They argue that when national security is on the line, you can't just let a critical industry fail for the sake of free market purity. But on the other hand, you have critics who see a really dangerous precedent here, a government that's starting to pick winners and losers, which could distort the very market it's supposed to be protecting.
In those critics, the free market purists, they're asking some really tough questions. Like, okay, if the government can save Intel, who's next? And doesn't this just shield struggling companies from the very market pressures that force them to get better and innovate? There are even legal questions about whether the CHIPS Act even allows for this kind of equity deal. And of course, whenever government and big business get this cozy, you have to worry about the potential for cronyism.
And really, this quote from one analyst just nails it perfectly. This story is about more than chips. It's a test of how far America will bend its free market principles for security and dominance. This whole thing has become a test case for the future of the American economy. So that's the big question we're left with. Intel gets the lifeline it desperately needed to survive and fight another day. The U.S. government secures a critical piece of its technological armor. But you have to wonder, right? Is there a hidden cost? Does the ideal of a free market come out of this whole thing just a little bit less free? That's something we're all going to be watching.